Hey guys, so for today I'm going to go over a different type of investment strategy, a focus on international markets and emerging markets. What are the differences between both and what to look for? So this is one from Fidelity. It's called the Fidelity International Value ETF, also known as FIVA, FIVA, which is the ticker symbol. If you want to look at the overall performance, one of the key things you want to pay attention to is something called the MSCI. MSCI is a Morgan Stanley index that they have created to create a benchmark, kind of similar to the S&P 500, which oversees US large cap companies. They oversee international developed companies and also emerging market companies, basically smaller cap or smaller countries. So the value approach of the MSCI index has done 32% in a 1 year average, and the general developed markets has done 26%. This fund has done 35%. So if you compare it to the S&P 500 year-to-date performance, or 1 year average is actually 15%, year-to-date is 17%. This is something to really pay attention to, because if you were only in the S&P 500, you would have missed out on large market gains. So looking at the year-to-date performance, this has actually done 42%. So you definitely want to be in a lot of strong-hearted international funds as well. They're expected to still do well. International markets are still expected to do well. So if you're really looking to diversify your investment strategy, definitely would look into having this. So, what are some other things to pay attention to as well? Obviously one of the key things to pay attention to is the distributions. So, like I said, typically a value-oriented fund is going to have higher interest rates. So this is going to be yielding 2.42. SEC unsubsidized yield basically just means what is the net interest you're going to earn annually after fees. Seems like this fund's fee is about like 0.25%, so not much in terms of fees, and you're getting strong performance with this. In terms of the composition, this is kind of a key differentiator if you want to know what kind of companies to look for. They're generally comprised of 3 different types of continents. So when they say North America and it's an international fund, it typically just means Canada. And then when they mean Europe, basically it's just almost every single nation in Europe. And then obviously in Asia, their main holding is going to be in Japan. So if you see here, obviously Toyota is going to be one of their holdings. They are considered probably one of the most value-oriented companies in the car manufacturing space. Especially times like right now when there's a money pinch, people are more likely going to be buying Toyotas versus buying a Bugatti because it's just more affordable. And Nestle, obviously, I'm sure you guys are familiar with the chocolate brand. Growing up as a kid, obviously they're known to have a value approach as well. Now there's going to be somewhat of some growth companies as well. So if you see here, there's a company called ASML. For those of you guys who don't know, they are the companies that create the machinery needed for companies like TSMC, which creates the chips for NVIDIA. So they are basically going to have a larger holding. There's no need for AI demand to die anytime soon. It's still going to be an important part of the growth of the global economy. So ASML is kind of at the smack in the center of everything. So it would be very dismissive to not have them as a holding. So that's going to be one of the approaches you want to get into. If you still want to get a little bit more diversified, you don't want to have all your eggs in one basket. Another fund to look into is iShares. So iShares is a subsidiary of BlackRock. BlackRock is primarily known for offering bond portfolios, but iShares is basically their equity portion that they focus on. So if you see here, their 1 year performance has done 18 or 19%, but this is as of September. So generally speaking, if I want to see a more active or so to speak, more current performance, I always go on Google, type the ticker symbol, and year to date it's done 30%. So this has done favorably well as well. Obviously you want to also pay attention to other things too, including interest rates. So the interest rate on this has done 1.36, not going to be as high as the value oriented. This isn't really a value oriented investment strategy, but it just happens to have a decent yield too. That's usually a good sign of a decent performer, and generally you're looking at somewhat of a value-oriented approach. You want to have funds that have a bit of a value tilt in it as well. So if you look at the overall performance, as mentioned before, if you look at the spread out average, yes, it may not outpace the S&P 500, but you're going to miss out on big rallies when there's big opportunities like there are now. So what are the holdings? This is one of the key differentiators. So you're going to see a lot of Taiwanese, Chinese, Indian, and South Korean companies. So TSMC, Taiwanese company; Tencent, a Chinese company; Samsung, Korean; HDFC, which is a Indian bank, right? Like there's a lot of very, very strong reliance on these kinds of companies. And you're going to see the sector, you're going to see a lot of IT, but you're going to see actually a lot of financials, right? A lot of banks, especially insurance companies, are going to be doing extremely well. Insurance companies typically provide a lot of stability in the overall economy. So as long as you see that, you want to have some mixes of value approach along with growth to maximize your investment strategies. And essentially, at least in my opinion, I think these are two good funds to look into if you're really looking for some strong performance and you're trying to round out your international holdings as well. Anyways, I hope this helps. This is just some basic ways to learn how to invest, and hopefully you guys don't miss out on some market rallies. If you guys have any other suggestions, drop a comment, let me know. All right, bye.